and welcome to this fresh package of Energy Frontiers. I am Justina Okechukwu. These are the top stories we tracked for you over the course of the week. Uganda is looking to commission the first 2 units of the 600 megawatt Karuma hydroelectric power plant this December. The plant was initially scheduled to run in 2019, but was delayed due to technical issues such as flooding, disruptions from COVID-19, and land acquisition issues. The other 4 units are expected to come online in subsequent months. A London-based electricity generation company, Globalec, has announced plans to reach a legal close on 6 solar power projects in South Africa, with constructions expected to start in 2023. This is as the UK government announced plans to provide South Africa with grants-funded technical assistance to help unlock green hydrogen opportunities and boost skills in the sector. Now, all roads lead to Luanda next week for the 2022 edition of the Angola Oil and Gas Summit. The high-profile event will showcase a renewable energy dedicated panel discussion where industry experts will explore ongoing market trends, investment opportunities, and industry prospects to reawaken new investment in green energy. And down in Congo, Brazzaville, the International Conference and Exhibition on Hydrocarbons holds November 30 to December 2nd. The summit takes place at a time when the Congolese energy market is in the midst of a sectoral revival owing to regulatory reforms, an accelerated drive in exploration and production, as well as rapid increases in global demand for natural gas. Now, Kibo Group, a renewable energy-focused development company, has announced the signing of a renewed memorandum of understanding to sell 300 megawatts of power from the Mbeya Power Project to Tanzania Electric Supply Company Limited. And that has been a snapshot of your energy news headline. Next, we drill down into green and sustainability bond offering markets in Africa. This is Energy Frontiers. Welcome back to the program. The International Finance Corporation this week signed a cooperation agreement that will allow the private sector lending arm of the World Bank dig deeper into Africa's biggest economy in terms of green and sustainable bond offerings. The deal with the Nigerian Exchange Limited looks to facilitate knowledge sharing with the IFC and was presented at a co-workshop organized by both parties in Lagos.
Please, let's give a round of applause as soon as they both say I do. They haven't said I do. Both of them I do. So as soon as they put 20 paper there, we have the photo up. Okay. Via the IFC and Nigerian Exchange YouTube as well as on Zoom. And if you log in on other platforms as well, you can also watch this particular event virtually at frontierafricareports.com. So we're still where you are, and you can have a handshake with it and
The International Finance Corporation says it provides a wide range of support to potential issuers of green and sustainable bonds around the world, and Africa in particular. That was according to Dr. Riccardo Ambrosini, the lead climate finance Africa at the IFC. So I sat down with him for more at the NGX IFC event. So talk to me briefly about IFC's program across Frontier Africa as regards supporting green bonds.
So in IFC, we support the development of green bonds and the market of green bonds in Africa on 3 main ways. One is by working with Capital Market Authority and stock exchanges on socializing green bonds directly with these aggregators. So basically knowledge dissemination, support on the issuance of guidelines, and basically organizing workshops and conferences to reach out all the stakeholders in the country. The second pillar of our intervention is with the potential issuers. And there we support on development of a green strategy, knowledge sharing on best practices on reporting and disclosure of climate transactions, and most importantly on developing a pipeline of eligible projects, or recognizing what projects they already have in their portfolio or in their pipeline. The third pillar is on support on the green component of bond issuance, basically focusing on the 4 pillars of green bond issuance, basically green use of proceeds, basically making sure that all the funds that are from the green bond are invested in green assets.
Interesting that you noted that there is rules and there are reporting guidelines. So how do you regulate this sector when it comes to reporting and the guidelines?
Okay. So the green bond market is a $1 trillion plus market dollar. And it has been developed so far on the back of voluntary standards, basically ICMA's green bond principle, social bond principle, sustainability bond guideline, and the second party opinion, basically a third party that assesses the green character of the bond. So for us, this is how we make sure that our investment go to green transactions.
So who are IFC's critical partners across the region in Africa in pushing green for green bonds?
So typically there are dedicated investors to ESG, so typically from large investment banks and other. Then you have also pension funds, insurance companies, so you have institutional investors at the national level, plus you have international investors that are typically funds and other similar players that are dedicated to ESG, so green and social bonds.
Now, how critical is it for the capital markets in Africa to develop more products that will attract more green-based investments?
So if you look at the way green or climate transactions, assets are being financed all around the world, you can say that there is a large component, a large percentage that is financed through capital markets. Then you look at Africa, and then that's not the case. So typically, climate projects or renewable energy, green infrastructure, green buildings, climate smart agriculture. These projects are typically financed through commercial banks or IFIs. So developing capital markets for this type of asset will provide an additional source of funding to these projects. That's why it is very important to develop not only the sustainable capital market, but the capital markets in general, so that they can provide funding to a wider range of companies that require such funding.
The green bond market in Nigeria is yet at its infancy, as total issuance so far stands at a mere $71 million, while the entire window of offering for the African continent is estimated at $10 trillion. So I asked one of Nigeria's biggest investment banking chief, Toyin Sani, the executive vice chairman at Emerging Africa, for her views on the growth potential of green and social bonds. Take a listen.
All right, so tell us about what you're doing in the area of green financing across Africa.
We are very committed to sustainable financing. Specifically, we have brought 2 green bonds to the market as both issuing house and trustee on behalf of North-South Power. These were 2 successful issuances, and it was interesting that the second issuance actually did not need an infra credit wrap, which we had to put, which is like an independent guarantee, which we had to put in place for the first one, because that was a first issuance. So for us, it demonstrated that when you bring a credible issuer to the market, they are able to raise funding at increasingly lower costs and much more easily, because the market gets confidence in them. We at Emerging Africa Group are completely wholly sold out to ESG. We demonstrate it by operating from an eco-friendly campus where we are powered by solar, where our employees are able to work in a natural outdoor environment. We've also initiated a lot of moves, including the fact that we no longer print physical cards and we use electronic cards, and we are continuously reducing our carbon footprint, and we're helping clients to do the same by raising green finance for them. We have a green bond initiative that we will be coming out with soon, and those are some of the things that we're doing in the area of ESG. Of course, ESG is not just about the environment, it's also about social and governance initiatives. So one of the things that we hold dear is also achieving equality. So we are a very gender diverse organization at board, management, and indeed at all staff level.
So has there been any challenges in terms of partners, donors, and the likes, especially when it comes to green bond financing and investments?
Okay, so for Sub-Saharan Africa and especially for Nigeria, obviously the green bond space or green finance space is relatively new. So the only challenge is obviously awareness creation and also capacity. And incidentally, we have a capacity building division where we also provide training for operators and potential issuers, and generally for managers of businesses on sustainability and governance. So capacity building is a big challenge. In terms of availability of funding, I think there's a significant pool of funding available, both by way of proper investments and grants, but obviously to the necessary mechanism to be properly certified to access that funding is part of what we need to grow in a market like Nigeria and in all emerging markets.
Let's touch now on social justice implication of climate change beyond reduction of fossil fuel emissions. Stay with us. Welcome back. I am Justina Okechukwu. Nigeria's Vice President Yemi Osinbajo says making capital available for the build-out of energy systems is central to reaching the goals of the Paris Agreement. The Vice President was speaking at a public lecture on Africa and climate justice at the Queen's University in Kingston, Canada. This is an excerpt.
And I think a big win for those of us who followed the proceedings in Egypt at COP27 was the Loss and Damage Fund, which is to compensate poor countries for climate change-related loss and damage. Although we're not at the point yet where we're sure of how the funds will come together or how, for that matter, you'll determine who has suffered loss and damage and how, and whether it will be adequate for the purpose. But we're happy at least that we've made progress because the Loss and Damage Fund at least was one that many of us fought very hard for and were able to get it at COP27. So a just approach, what would be just and fair to the global energy transition, should recognize, in my view, at least the following. One is that developing economies must have universal energy access at levels sufficient for dignified livelihoods and economic growth. Two, that energy transition must place energy access for both consumptive and productive uses, as well as the required policy flexibility, financial and technical support at the heart of climate action. And we cannot have climate action that does not take these issues into consideration. Three, that making capital available for the build-out of energy systems is central to reaching the goals of the Paris Agreements. And four, that to meet its decarbonization obligations, Africa needs both conventional and development and innovative mechanisms like debt for climate investments, carbon trading, etc. By the way, there's a lot of work going on voluntary carbon markets. We're collaborating with several African countries and Colombia in trying to deepen our climate finance alternatives, and the voluntary carbon market is one of the very major initiatives, which again was announced at COP27, and which we hope will be a pathway for not just raising climate finance capital, but also for accelerating decarbonization efforts. And we heard today at our earlier meeting about some of the carbon capture options that are being explored here at Queen's University, and we hope that we'll be able to benefit from all that effort. And 5, that we must lift inhibitive development finance restrictions and upscale technology transfers to ensure that development regions have access to the latest energy innovations and can build local industries on fair terms. And finally, that the race to net zero must not leave Africa in the dark.
And that's all for you on this week, and we hope you enjoyed it. Remember to follow Energy Frontiers on Frontier Africa Reports website and across all our social media handles as indicated on the screen. I am Justina Okechukwu, and it's goodbye from here.